Hello, and welcome to Equities Lab. We're going to focus on a single stock and see how to analyze it effectively. We're going to pick Procter Gamble as our stock of choice. You have probably bought something made by Procter Gamble from the grocery store. You'll notice it's a $186 billion market cap company based on our tear sheet here, and you will notice that the stock has strongly underperformed the S&P 500. Lest you get too distressed by this, you will notice that if you pick any of the majors, many of them have actually managed to underperform the S&P 500. I believe the S&P 500 must be filled with caffeinated monkeys or something. In any event, so back to Procter & Gamble, we're going to want to know a few things about it. So why don't we go ahead and use the advanced way of plotting to plot the earnings. The advanced way is you put plot underscore in your tab name and then you call it whatever you want. Banana, here earning. And I'm going to choose the earnings per share, and we're going to plot it. When we do, we're going to see that everything was hunky-dory, and they made a little over $1 per share for a long time until they went to $0.25 per share, probably due to the China problems. Now, if we go back, we can see a slightly longer-term scale, and we can see that they've had bad years before. They had a bad year in 2001. And they had a mediocre to bad year in November 8th of 1999. Going back to our more standard perspective, we're going to look here and we're going to decide that we want to see a few other things. For instance, we might like to see a profit margin. So I'm going to do that by means of plotting the net income divided by the total revenue 1/4. Notice the autocomplete helps me out. As I do that, I'm going to see that the numbers are in general positive until the very end, and notice that they're also ridiculously tiny. This is otherwise known as 3% or 12%, but let's go ahead and make it a little easier to see by means of multiplying the whole thing times 100. So I put a times over it and I type in 100 and I reload. Having done that, we can see a profit margin. Now, the next thing I'm going to want to do is I'm going to want to examine the inflation to see how Procter & Gamble's profits have changed over time based on the inflation. We're going to respell that correctly. So that's going to be plot underscore inflation. Where are we going to get inflation from? Well, clearly typing inflation and hitting return is not going to work. The reason why, of course, is that inflation by itself is a very generic concept. We get all of this external data from Cuando. As you notice here, there's a permalink down here that you can use. That's the one you're going to want to use. Permalink here, it will always be available at this link. You are restricted to using the free data for the permalink, but you're going to right-click and you're going to say copy link. There's millions and millions of data sequences, and so Cuando is a great place to get such data from. So you're going to paste it in, and you're going to hit go, and it's going to work instantaneously. Now you will notice that the inflation data stops as of June 1st, 2015. If you were to try and use this data for investing, you would actually have a relatively serious problem, which is that the inflation data is updated at a substantial lag. Notice this big white period here. You would need to lag the data or push it in the past, because otherwise you're using data you don't have access to yet. When the data changed here from December 1st to December, whenever it goes down, I can guarantee you that they did not release the inflation data for December 1st, 2014 on December 1st, 2014. They actually released it sometime in March. However, for this purpose, we don't care. We're not using it for investing. We're using it to try and measure the effect of inflation on the profit margin. On the earnings. So what we're going to do is we're going to deflate the earnings by dividing it by the inflation measure. When I then change the time period to 10 years, or all actually, we're going to see that the inflated earnings are substantially lower than the so notice here that the earnings look like they're not increasing. Procter & Gamble's Procter & Gamble's earnings are pretty much keeping pace with inflation. They're not really increasing. The profit margin's bouncing back and forth, although if we were to decrease the you can see that the change is pretty steady. So now what we're going to do is, you're going to say this graph is a bit hard to use. So we're going to go ahead and pull the bar up here, as you can do. And then the second thing we're going to do is we're going to notice that this is rather cluttered. We don't need to see the S&P 500, so we're going to hide that line. We may decide that looking at this deflated earnings, which pretty much goes nowhere, is, now that we've done that, the other thing you might wish to do is to copy this chart. The way you're going to do that is you're going to take a screenshot tab, then you can page over to Finder, and we can run Word somehow. Yep, big W on the bottom. Word's going to come up, and when it does, you are going to then hit Command V to paste, and your image is going to be ready for Stock Club presentation. Of course, it's important that you screenshot the right tab, which you'll do by clicking on the actual tab itself.